Hello, my dear students. Hope you guys are all doing good. Hope you guys are all perfectly fine. So, welcome back to our revision series. Now, in this session, we are going to quickly revise the chapter Specialized Areas. So, chapter which we are going to revise now is a Specialized Areas. Very simple chapter, very small chapter. Hardly we will take an hour to complete the revision. So, but once again, important from the examination perspective. So, what exactly we are going to cover in this chapter? In this particular chapter, we are going to discuss about three standards and three SA 800 series of the standards. Those three standards which we are going to discuss are first one is SA 800, then we are supposed to revise SA 805, then we will take up SA 810. So these are all special assignments. These three standards are going to talk about some special assignments, some special audit assignments which we chartered accountants sometimes might be called upon to do. Like SA 500 will be talking about in case if the client is asking you to do audit of the financial statements which are prepared as per special purpose framework. If the financial statements are prepared as per the requirements of the special purpose framework, then how you are supposed to do the audit, what considerations you have to keep in mind, what special things you have to consider, which areas you have to focus, when you should accept, when you should not accept, that guidance is given under SA 800. Then if you come to SA 805, this standard is going to talk about if a client is asking you to conduct audit of a single financial statement or a specific element of the financial statements, then what you are supposed to do, when you should, when you can accept, when you cannot accept, if at all you have accepted, what considerations you have to keep in mind, what areas you have to focus, how you have to give the report. All that guidance is given in SA 805. Then coming to SA 510, this standard is going to talk about in case if the client is calling you to conduct the audit of the summary financial statements which are derived from the main financial statements, then how you are supposed to do the engagement, when you should accept, when you should not accept, what considerations you have to keep in mind. So all these things we are going to revise it now. So first I will be taking up SA 800 for our revision, which is talking about special considerations while conducting audit of the financial statements prepared in accordance with special purpose framework. Guys, if you remember in our introduction chapter, when we have taken up the introduction chapter, first chapter, whenever we have taken up the revision, I have spent a significant amount of time in making you understand the difference between general purpose frameworks and special purpose frameworks. General purpose framework refers to such a framework which fulfills the financial information needs of various users of the financial statements. Framework is basically a set of rules and regulations. General purpose framework means those set of rules and regulations which if you follow and prepare the financial statements, that will fulfill financial information needs of various users simultaneously. So that we call it as general purpose financial statements or general purpose framework. Whatever normal things we have read it till now, whatever normal standards we have understood till now, all that standards are going to talk about the general purpose framework related financial statements. But in some circumstances, we might be required to follow some framework, we might be required to follow some rules and regulations where that rules and regulations are going to fulfill information needs of only specific users of the financial statements. So special purpose framework means that framework which is not meant for all the users simultaneously, those frameworks which are meant to fulfill information requirements of only one or two specific users. So we are not preparing that financial statements for the common use by everybody. We are preparing the financial statements for use by just one or two specific users. That financial statements we are going to call it as special purpose financial statements, or that framework we are going to call it as special purpose framework. So sometimes as a chartered accountant, you might be called upon by the client to do the audit of special purpose financial statements or those financial statements which are prepared as per special purpose framework. Then what considerations you have to keep in mind? Like if I have to give you few examples, few examples of the special purpose framework, like for example, a client has prepared financial statements on cash basis of accounting. Generally in the general purpose financial statements we follow accrual basis, but because of some requirements of the client, might be this client is requiring a loan from the banker. Now the banker asked, boss, I will give you loan only when you prepare the financial statements on the cash basis and get them audited. So now the management of that client has prepared the financial statements on cash basis. Now they came to you, sir, we have prepared the financial statements on cash basis, please do the audit of it. Now first thing, why the client is preparing the financial statements on cash basis of accounting? To fulfill information needs of only one specific user. Here we have the example of banker. Whatever may be the purpose, the client has prepared the financial statements on cash basis of accounting. They approached you, asked you to do the audit of that financial statements. So now what things you have to keep in mind, whether you should accept it or not, what considerations you have to keep in mind. So that is what SA 800 is going to give the guidance. Similarly, one more example if I have to give you, according to some law and regulation, some law is asking the client to prepare the financial statements as per specific rules and regulations, not Schedule 3, not accounting standards, because of requirements of some law. Some regulators might require some kind of organizations to prepare the financial statements as per specific laws and regulations. That could also be one example of special purpose framework, where we are preparing the financial statements to fulfill information needs of only that specific only for that specific person who is regulator. Or sometimes because of a contract, we might enter into a contract, and in that contract they might ask you to prepare financial statements as per special requirements. Like for example, there is a company X Limited. This X Limited company is looking for one buyer. They want to sell this company. They want to sell a stake in their company. So Y Limited came forward. Y Limited is a potential buyer. He was an investor. Y Limited company is an investor. Now this Y Limited company want to acquire interest in this company X Limited. They want to buy. They want to amalgamate with this company X Limited. Now they both have entered into one contract. This investor and investee both have entered into contract. In that contract, it was agreed that for the purpose of determining purchase consideration, this company X Limited investee should prepare financial statements according to certain rules and regulations, and on that basis of financial statements, purchase consideration will be decided. And in the contract, it was written that those financial statements which are prepared by this company X Limited, as per special rules and regulations, are required to be audited. So now this client has prepared the financial statements according to the requirements of the contract, and they came to you and told, sir, please do the audit of this financial statements. This is also one example of special purpose framework. So if you look at the examples, whatever I have told you, all these financial statements are getting prepared to fulfill information requirements of specific users, not for the general users, not for the use for everybody. These financial statements are prepared to meet information requirements of one or two specific users. And if the client is approaching you and asking you to do the audit, what things you have to consider. That is what SA 800 is going to talk about. So first the standard is going to talk about, sir, if the client has approached me with this request, sir, please do the audit of the special purpose framework related financial statements, whether I should accept the engagement or I should not accept the engagement, what factors I have to consider, what things I have to keep in mind when deciding whether to accept that engagement for conducting audit of the special purpose financial statements, or I should not accept the audit of that special purpose financial statements. In deciding that, what factors you will consider. So the first consideration what you need to have is you need to determine the financial information needs of specific users. Who is that intended user? What is his information requirement? What is his need? That you need to understand. And whatever financial reporting framework they are applying, whether they are acceptable or not, that you need to determine. So first step, you need to understand whenever a client is approaching you and asking you to do the audit of the special purpose financial statements, first thing you have to consider, first thing you have to know, what is the requirements of that specific user, that you need to understand. And whatever framework they are following, whether it is acceptable or not, that you need to determine. Now, that special purpose framework, that financial reporting framework, whatever is getting followed in the preparation of financial statements, that financial reporting framework might arise from three sources. Nothing but we call it as financial reporting standards. Financial reporting standards means nothing but what rules and regulations the management is following in the preparation of that special purpose financial statements. So these rules and regulations, these frameworks can come from three different sources. Number one, it could be coming from some standards which are given by some institute or organization like ICA. Sometimes they might be required to prepare the financial statements as per the standards given by some institute, given by some established organization. Sometimes this financial reporting framework which is getting followed in the preparation of that special purpose financial statements might be given by law or regulation. Law or regulation will prescribe what kind of rules and regulations you have to follow. Or sometimes the financial reporting framework which is getting followed in the preparation of that special purpose financial statements, that might also arise out of contractual obligations. So the financial reporting framework which is getting followed in that special purpose financial statements might come from institute or organization, might be depending on some standards issued by some institute or some organization, or it might come from some law or regulation, or those financial reporting standards might arise from a contract. If those financial reporting standards are issued by some institute, some organization, generally they are presumed acceptable. Here we need not doubt it, it will be presumed as acceptable. We need not question it. So if the institute, whoever has given that financial reporting standards, if it is a credible institute, if it is capable of doing it, no need to have any second thought, it will be deemed acceptable. Similarly, if any law or regulation has given, if any law or regulation has given that rules and regulations which are required to be followed, here also we can deem it as acceptable. Here also we need not apply, we need not think about it, it will be presumed acceptable. Generally we presume it as acceptable, we go with the assumption that it is acceptable. However, in case if that rules and regulations are given by the contract, we need to check attributes. So what are the characteristics of that reporting frameworks which are given in the contract? Whether they are containing all the characteristics which we generally expect from some acceptable applicable financial reporting framework. So in the first two cases, if the financial reporting standards are issued by institute or organization, or if it is given by law or regulation, we generally presume it as acceptable. But in case if the terms and conditions, if the rules and regulations are given in the contract, then we need to check for attributes, nothing but basically characteristics. What are the characteristics of that framework given in the contract? Is it generally acceptable or not? So what are the characteristics that we need to understand? And as an auditor, we need to apply our professional judgment and determine whether those rules and regulations which are given in the contract are acceptable or not. So consider all these factors and first determine whatever that financial reporting framework is there, which is followed in the preparation of financial statements, whether it is acceptable or not. If it is acceptable, happily you go and accept the audit, do the audit. If you find that it is not acceptable, it is not fulfilling the information needs of the specific users, then don't accept such engagements. As simple as that. So this is what the considerations which you have to keep in mind when accepting the engagement. Then, sir, okay, after considering these factors, after considering whether these requirements are acceptable or not, sir, I felt that the financial reporting framework is acceptable. I have accepted it. So once you have accepted the audit, then what you should do? Then you have to start doing the audit. But first what we do, we try to plan the audit. Then after doing the planning, then we will perform. Sir, when I have considered all the factors and I have accepted to do the audit of the special purpose financial statements, when I actually start planning for my audit, when I actually start doing the audit, what things I have to keep in mind? What things I have to keep in mind? So number one, you need to comply with ethical requirements. Like the way we comply with ethical requirements in the normal audits, we need to comply with the ethical requirements even in the case of audit of special purpose financial statements also. So what are the 5 ethical requirements? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. I need to comply with all these 5 ethical requirements. Similarly, whatever standards on audit which are relevant for this particular audit, I need to comply with all that standards also. Sometimes the standard will not be applicable. If SCA is not applicable altogether, then you can ignore that standard. For example, let me give you one simple example to make you understand. What example I have to give? Related parties. SA 550 related parties. See, SA 550 will come into picture only when the client is having any related party relationships or transactions. If the client is not having any related party transactions, SA 550 itself will not become applicable. So if the standard is not applicable in this particular audit engagement, you can ignore it. Or standard is containing some conditions. Only if some conditions are fulfilled, then only that standard will come into picture. Like for example, SA 530. If you take SA 530, which is talking about audit sampling will become applicable only when you have taken a decision to verify the transactions on sampling basis. If you have decided to verify the transactions on 100% basis, then SA 530 has no role to play. So unless a standard is not applicable or unless conditions present in the standard are not applicable in the given case, then you can ignore that standard. Otherwise, you have to comply with each and every standard. That is what they try to say here. Even in conducting audit of the special purpose financial statements also, you have to comply with all the relevant standards on audit unless it is not relevant for you. Sometimes we might be required to depart from a requirement of the standard also. Sometimes because of some exceptional circumstances, we might not be able to follow whatever has been given in the standard on audit. We might do something else. We might depart from the requirements of the standards on audit. We might deviate from the requirements of the standards on audit. If you come across such exceptional circumstances, then you are permitted to even depart from the requirements of standards and follow something else, but you have to give the clear disclosures in your audit report in case if you are departing from standards on audit. Next one, some items require very much important consideration, like especially materiality. Materiality. So you have to pay close attention to materiality. In the case of special purpose financial statements, what is material, what is not material, that you have to pay a lot of attention. Next one, along with that, you should also try to consider the requirements of SA 260. Nothing but you have to identify who are those charged with governance in the client's organization and go and communicate with them. So whatever matters which are required to be communicated with those charged with governance as per SA 260, fulfill that reporting requirements also. And one more thing here, sometimes the persons who are preparing that special purpose financial statements and the people who have prepared the general purpose financial statements may be different. They might be same persons, they might be different persons. So even try to understand whether the persons who are preparing that special purpose financial statements are also the same persons who have prepared that general purpose financial statements. And after you have done with all your audit, you have to ultimately express an opinion. Why? Because until and unless you express your opinion, your audit is not coming to an end. And how to form that opinion, how to express that opinion in the form of a written report. Sir, how I have to prepare that audit report? Once again, as per SA 700, you have to follow the requirements of the SA 700 while preparing your audit report. Understood, everybody? So this is what regarding the considerations when planning and performing the audit. Very simple. What they try to say here, what are the things which you have to keep in mind while planning and performing the audit? Comply with ethical requirements, comply with the standards unless they are not applicable, and also sometimes you might be required to depart from the standard in exceptional circumstances. Then you can depart. You have to pay some special considerations, like especially determining materiality. You have to pay more attention here. You have to fulfill the requirements of SA 260, and finally when you are done with the entire audit, you have to form an opinion, and while forming that opinion, consider the requirements of SA 700. That's it. Next, coming to the next important part, description of applicable financial reporting framework. So in this particular standard in SA 800, they have told that when you are preparing your audit report, you need to evaluate. As an auditor, one of your important responsibility is to analyze whether the financial statements refer or describe the applicable financial reporting framework. So as an auditor, you need to check whatever financial statements which the management has prepared. In that financial statements also notes to accounts will be there. In the notes to accounts, we have to check whether management clearly explained what is the financial reporting framework they have followed. They should have told, we have followed so and so rules and regulations. We did not prepare it as per general purpose framework. We followed these special rules and regulations. That they have to compulsorily disclose to management. So as an auditor, most important thing which you have to do is whether management in their financial statements, in their special purpose financial statements, did they describe clearly what framework they have followed? Did they describe clearly what and all rules and regulations they have followed in the preparation of that special purpose financial statements? Go and have a look once. And also, if there are any in case, especially if the financial statements are prepared as per the requirements of contract, if the financial statements are prepared especially as per the requirements of the contract, you have to even explain, the management has to even explain any significant interpretations of the contract, any important analysis of the contract is required, any important explanation regarding the terms of the contract is required to be given. The management should identify and explain that clearly where in the financial statements, especially in the notes to accounts. And particularly you have to mention, so yeah, SA 700 deals with the form and content of the audit report. When you are giving audit report on the special purpose financial statements, you have to specifically mention in your audit report, you have to mention what is the purpose, for what purpose these special purpose financial statements are prepared, for whose purpose, who are the intended users, for which person's requirement these financial statements are prepared. That as an auditor, you should also highlight it in the auditor's report. See, in the first 2 points, they are asking you to check whether management explained or not. Third point is talking about, as an auditor, what is your responsibility? In the final audit report, whatever you are giving, you have to specifically mention in your audit report for which purpose these special purpose financial statements are prepared. Who are the intended users? This you have to clearly mention even in your audit report also. And also you have to specifically mention in case if the management has been given the choice. In case if the management has given the choice, like for example, they are required to prepare special purpose financial statements as per the contract. In the contract, they have given the management two options. They have given two kinds of frameworks from which management can choose. If that is the case, in the management responsibility paragraph, auditor should clearly explain that in the given case, management has been given the option and management is having the responsibility to choose one of the frameworks, and the management has chosen so and so framework, that you have to clearly explain. So this is what two things you have to maintain special attention. So as an auditor, in your auditor's report, mention what is the purpose of that special purpose financial statements, who are the intended users, and in case the management is given the choice of selection of that applicable financial reporting framework, clearly explain in the management responsibility paragraph that management has been given the option and which option they have chosen. Next, alerting the readers that the financial statements are prepared in accordance with special purpose framework. Even in your audit report, you have to alert the readers, anybody whoever is reading that audit report on the special purpose financial statements, you have to alert them saying that these financial statements are prepared only for specific users, only for specific purpose. As a normal user, don't refer to these financial statements for your decision making. That you have to clearly mention. You have to alert the readers. Why? Because sometimes what will happen is these special purpose financial statements and the audit report on that will be circulated, will be uploaded. So some person like a genuine investor who doesn't know what is the difference between special purpose financial statements, general purpose financial statements, by mistake he might download that special purpose financial statements, and on that basis he might take the decision. But he is a normal investor, he should not have used a special purpose financial statements, he should have used general purpose financial statements. But most of the investors will not have that education. No. So that's why in your audit report, specifically alert, if anybody is reading that special purpose report, you need to specifically mention somewhere there, boss, this report, these financial statements are for so and so purpose, these are for so and so users, only these persons should use, normal person should not use. That you have to alert the readers. So that's what they try to say here. And also you should try to pay attention, you should also try to restrict or distribution of use. You should also carefully monitor to whom these special purpose financial statements are getting circulated. Are they circulated only to the intended users, or are they circulating to everybody? If management is trying to circulate this to everybody, try to stop the management. Unless it is required by law or regulation, management should not circulate the special purpose financial statements to everybody. They should circulate it only to the intended users. Sometimes because of the requirements of laws or regulation, they might be required to circulate this to common public also, but ask the management to clearly, even ask the management to alert the readers also. But to the extent possible, you should insist the management to stop the circulation to everybody. To the extent possible, circulate it only to the intended users. If you circulate it to everybody, unnecessarily common persons might get confused. So within your power, you try to restrict, or you try to put a restriction on distribution, or you try to put a restriction on circulation of that audit reports and special purpose financial statements. So these are the special things which you need to keep in mind while conducting audit of the special purpose financial statements. That's all. This is what SA 800 is trying to communicate. Clear everybody? Simple standard, very easy standard. Clear? Now we will take up SA 805 for revision. So SA 805 is also talking about one special assignment, which is sometimes as an auditor, you might be called upon to conduct audit of a single financial statement, or sometimes you might be called upon to conduct audit of specific element, account, or items of the financial statement. This is also one special purpose audit. Let me tell you what exactly is the meaning of single financial statement or specific element, accounts, or items of the financial statements. Like for example, one day a client has approached you, one day a client X Limited has approached you to your office and they told, sir, we want you to do the audit of only P&L. We want you to, or some other client Y Limited has came to you, approached you, and he asked you to do audit of only balance sheet. Or some client is approaching you and to conduct audit of only cash flow statement. So that is what the meaning of a single financial statement. Sir, will these kind of engagements happen? Yes. Sometimes some clients might have specific requirement and they might approach you to do audit of only single financial statement, like conduct audit of only P&L, conduct audit of only balance sheet, conduct audit of only cash flow statement. So that kind of assignments, we call it as audit of single financial statement. Similarly, sometimes a client will come to me and ask, sir, please do audit of a specific element, account, or item of the financial statement. Like for example, one day a client is approaching me and asking me to verify, sir, you please verify only accounts receivable, provision for bad and doubtful debts. Or one day a client is coming to me and telling, sir, you please verify only inventory and creditors. We don't want you to do the audit of other areas. Please do the audit of only inventory and creditors. One day a client is coming to me and telling, sir, you please verify only tangible assets. Sometimes a client is coming and telling, sir, you please verify only all the current assets. So these are all specific elements or accounts of the financial statements. So like this, sometimes some clients might approach you asking you to do audit of single financial statement, or sometimes the clients might approach you asking you to do audit of specific element, account or item of the financial statements. In case if some client is approaching you and asking you to do this kind of engagement, when you should accept, if at all you have accepted, what considerations you have to keep in mind, what reporting requirements you have to keep in mind, all the guidance has been given in this standard. Very simple standard, will not take much of a time. Let us try to have one quick recap. So first of all, they are telling what is a single financial statement. I have already explained. And then they are explaining what is the element of a financial statement. This also I have explained and gave you the examples. Okay. So like in SA 800, they have told, sir, when a client is asking you, when the client is approaching you and asking you to do the audit of a single financial statement or a specific element of the financial statement, what are the special things you have to keep in mind? What considerations you have to keep in mind in deciding whether to accept this engagement of single financial statement or specific element of the financial statements? Here also, you need to check whether you will be able to comply with the ethical requirements, whether you will be able to comply with all the standards, like the way we do it in other engagements. Here also we have to check two things. In case if we accept the audit of the single financial statement, in case if we accept the audit of that specific element of the financial statements, will you be able to comply with the ethical requirements? Will you be able to comply with all the standards? These things we have to consider. And if you are the person who is not conducting audit of the complete financial statements, sometimes it might become impossible for you to conduct audit of a single financial statement or specific element of a financial statement unless you are a complete auditor. For example, X Limited is there. This X Limited will generally prepare one complete set of financial statements. No, they will have that full financial statements like balance sheet, P&L, cash flow statement, notes to accounts. That one set of complete financial statements will be there. So in some circumstances, what will happen is, unless you are the person who is doing audit of the complete financial statements, you might not be in a position to do specifically audit of a single financial statement or specific element of financial statement. In some cases, it might be possible, but in majority of the cases, it might not be practicable. If you are not the person who is conducting audit of the complete set of financial statements, then in some circumstances, it becomes impracticable to do audit of single financial statement or specific element of financial statement. Sir, why it becomes impracticable, sir? Why? Because if you are not the person who has conducted the audit of entire financial statements, you will not have understanding. You will not have same understanding regarding entities environment, its internal control, and its entity environment and its internal control. See, if we are doing audit of the complete set of financial statements, we do risk assessment procedures, we get an understanding of entity, we get an understanding of environment, we get an understanding of internal controls. But if you are asked to do audit of only one specific item, in some cases, you might not have this knowledge about entity, environment, and its internal control. So it becomes highly impracticable for you to do audit of the single financial statement or specific element. And also, why in some cases it becomes impracticable to do audit of only single financial statements is, you will not have evidence regarding general quality of the accounting records. What is the quality of their accounting software? What is the overall quality of their accounting records? How far that accounting records are reliable? This understanding also you will not have. And in some circumstances, what will happen is, you might be required to do a lot of disproportionate work. You might be required to do a lot of disproportionate work. That means whatever commitment you have given and what you are supposed to do, there will be a quite mismatch. Like for example, a client has came to you and asked you to do audit of only or accounts receivable, only debtors they are asking you to verify. But while verifying that debtors, even I need to consider going concern assumption also. Even I need to consider going concern assumption also. But if I have to get the evidence regarding going concern assumption, I have to do more work. The client told, sir, you please do the audit of only accounts receivable. We will give you 50,000 rupees of fees. But in order to do the audit of accounts receivable, I am required to even consider going concern assumption also, which is much more work which I have to do. This is also quite not practicable, no. So sometimes when the client is asking you to do audit of a single financial statement or specific element of the financial statements, in some extreme circumstances, we might be required to do disproportionate work. What we have accepted and what we have to do, that might be a huge gap. So because of these reasons, if you are not the person who is conducting the audit of that complete financial statements, in some cases you will not have complete understanding regarding the entity, environment, and its internal control. And in some circumstances, you will not know about general quality of the accounting records. And in some circumstances, your work might be disproportionate. So because of these reasons, if you find that doing audit of only single financial statements is impracticable, or doing audit of specific element of the financial statements is highly impracticable, then what you should do, don't accept such audit engagement. Go to the client and say, sir, here conducting the audit in accordance with the standards on audit is not practicable. Let us do some other kind of engagement which might be more practicable. Like you can go and say, sir, I can't do here audit. What we will do is we will change this engagement from audit to review engagement, or we will change this engagement from audit to related services. So like that, if you feel that because of these circumstances, if you are unable to do the audit of a single financial statement, if audit engagement is not possible, go and tell to the client, sir, here because of these facts and circumstances, we will not be able to do the audit as per standards on audit. But what we can do is we can do a review engagement here, or alternatively what we can do is we can perform related services engagement here. Go and convince the client. Clear? If you find it is practicable, if you are not facing any trouble, even though the client has asked you to conduct audit of single financial statement and you are not the person who has been appointed to do the audit of the complete financial statements, but you don't find it impracticable, you can do it. If you find it impracticable, then start following these steps. Next one, like the way we have done in SA 800, we have to determine the acceptability of applicable financial reporting framework. No, so here also we need to do the same thing. Whatever framework they have followed in the preparation of the single financial statement or that specific element of the financial statements, how far that is acceptable. Is it containing all the disclosures? Is it containing all the presentation requirements or not? We need to check that acceptability of the applicable financial reporting framework as well. Understood? So these are the things which we need to consider while accepting that audit of single financial statement or specific element of financial statement. First one, if I am not the person who has been appointed to do the audit of the complete set of financial statements, I need to determine practicability. If it is not practicable, change the engagement to some other kind of engagement, and also determine whatever applicable financial reporting framework is there, whether it is acceptable or not acceptable. So after considering all these factors, I will decide whether to accept or not. Take for example, okay, after considering all these factors, I have decided I will accept this engagement. If you have accepted this engagement, now while actually planning and performing the audit, what things you will try to keep in mind. Here also the content will be same like SA 800, whatever we have seen. To the extent possible, we have to comply with all the standards on audit. To the extent possible, what we should do, we should comply with all the standards unless it is unless the conditions is not applicable, unless the SA is irrelevant, you have to comply with all the standards on audit. And sometimes what will happen is you will be the person who is conducting audit of the complete financial statements, and you will also be the person who is conducting audit of single financial statement. Like a client has asked you, sir, you are an auditor who is conducting audit of entire financial statements. You are a statutory auditor for them. Along with that, the client has also asked you, sir, apart from this engagement, you also do audit of only balance sheet. So sometimes same person can do audit of complete financial statements and also single financial statement or specific element of financial statement. Sir, in that circumstances, can I give a single opinion on both? No, you have to give separate opinion for your complete financial statements audit engagement. You have to give a separate audit report for standalone financial statements audit engagement. Don't show your misery that. Don't give both the reports, both the opinions in the single audit report. Try to differentiate it. You have to give a separate, not try, you have to mandatorily give separate audit report for the complete set of financial statements where you will express opinion on that complete set of financial statements. And whatever audit of the single financial statement you have done, on that you give a separate report. Don't try to give it in a single audit report. And also, one more thing, sir, if I have done audit of the complete financial statements also, can I use whatever evidence I have gathered in conducting audit of audit of complete financial statements, whatever evidence I have gathered, can I use it for the purpose of conducting audit of a single financial statement? Yes, you can do it. Happily, you can do it. If you have also conducted audit of complete set of financial statements, whatever evidence you have gathered, that evidence you can obviously even use in conducting audit of single financial statement. And one more thing here. See, when I say sometimes client will ask you to conduct audit of specific element of the financial statements. See, when the client is asking me to conduct specific element, like for example, they are asking me to conduct audit of only accounts receivable. When I say the client is asking me to conduct audit of only accounts receivable, I need to verify all the interrelated items also. I need to verify interrelated items of that accounts receivable as well. For example, accounts receivable is going to arise out of sales. In order to verify whether this accounts receivable is correct or not, sometimes I have to go to the sales area and also try to obtain some evidence. So when the client is specifically asking you to conduct audit of specific element, that element might have some interrelated items. Even you need to perform audit procedures on that interrelated items also. And one more important thing here, whatever materiality. See, if we are conducting audit of single financial statements, we have to determine materiality for that single financial statements or not. Yes. See, for the complete financial statements also, there will be materiality level decided. Tell me where the materiality level will be lower, where the materiality figure will be smaller amount. Whatever materiality level that you are fixing for the single financial statements will be generally lower than the materiality level which you have decided for the complete set of financial statements. It is quite obvious. So when we are conducting audit of the entire financial statements, we try to decide materiality for the financial statements as a whole. In case if I am conducting audit of one single financial statement, I try to decide materiality only with regard to that single financial statement. So that's why whatever materiality level that we are deciding for a single financial statement will be far lower than when compared with the materiality level which we have decided for complete set of financial statements. Now, the next most important content from this chapter is, from this standard is opinion, how that opinions are required to be given. How the opinion is required to be given. So basically, after you are done with the single financial statements audit or specific element of financial statements, we are required to express an opinion. How we will express that? How we will express that opinion? By the way of a report. How we have to prepare the report as per the requirements of SA 700. Even the audit report on the single financial statements is also required to be given as per the requirements of SA 700. And one more important thing here, this point as I've already covered, if you are a person who is conducting audit of consolidated complete financial statements and also single financial statements, if both the audits are done by same person, can I give a single opinion? No, I have to give separate reports. And these complete financial statements and the standalone financial statements can be published in a single document. Like for example, what the company is doing is they will give their annual report. No, in the annual report they have various documents. So in that annual report only, they are also including they are also including complete financial statements. They are also including that single financial statements. So in that annual report, they are giving the audit report on the complete financial statements. They are giving audit report on the single financial statements. You tell me, can they mix it everything? Can they mix everything? For example, they are giving audit report. After that, they are giving audit report on complete financial statements. Then they are giving audit report on separate financial statements, and then they have given complete financial statements copy. Then they have given standalone single financial statements copy. That means they're clubbing everything together. Can they do it? No. So as an auditor, what you should request is, if the complete financial statements and single financial statements both are getting published in a single document, ask the management to differentiate it. Ask the management to bifurcate it. Sir, try to have separate headings. First, give audit report on the complete financial statements and give then complete financial statements. Now give 1 or 2 pages gap. Then after that, you include audit report on the single financial statements and include the copy of the single financial statements. Don't club together. You can publish both in a single document. In one booklet you can give, but in that booklet also you have to differentiate. Don't club everything. Try to differentiate it so that user will not get confused. Sir, what if the management is not differentiating? I told them, as an auditor, I inform the management, sir, if you are publishing both complete financial statements and single financial statements in a single document, try to differentiate it. Show the differentiation between the two. But the management is not obeying my instructions. What I will do, I will not give my opinion. I will not give my report to the management, sir, until and unless you differentiate it, I will not give you my opinion. So that you have to clearly mention. See here. If you read this point here, an audited single financial statement or an audited specific element of the financial statements may be published together along with complete set of financial statements. You can insert them in a single document. But what is the most important thing? Differentiation. So if the auditor concludes that presentation of a single financial statement or specific element of financial statement does not differentiate, does not bifurcate it sufficiently, then the auditor shall ask the management to rectify, ask the management to do the proper bifurcation. And the auditor shall also differentiate the opinion on single financial statement from the opinion on complete set of financial statements. Definitely this point we have already covered. We have to give 2 separate reports. And the auditor shall not issue the audit report containing the opinion on the single financial statement or specific element on the financial statements until satisfied with the differentiation. Until you are convinced, yes, management has done the bifurcation in a proper way, you don't deliver that report to the management. Clear, everybody? Next. So now we will talk about opinions. Just give me a moment. I will open a new running notes in order to write this information. Just give me a minute. Right. So now in the reporting part, there are certain things which you need to understand. Reporting on whatever audit report you are giving on single financial statement, what kind of opinion you have to give. Here, there are certain considerations you have to keep in mind. So first, there could be two circumstances. Complete financial statements contain unmodified opinion. Complete financial statements are going to contain unmodified opinion. Number two, case two. Complete financial statements contain either a qualified opinion or it contains an emphasis of matter paragraph or other matter paragraph. Third scenario, complete financial statements audit reports contains either an adverse or disclaimer of opinion. Very important, guys. This is the major concept from this entire standard. So how your opinion should be, when what kind of opinion you are required to give on single financial statements audit or specific element of the financial statements, what kind of opinion you are required to give. That depends on what is the opinion on complete financial statements. See, if complete financial statements contain an unmodified opinion, if the complete financial statements contain an unmodified opinion, and you have verified the single financial statement or that specific element of the financial statement, you are convinced in that specific financial statements also, in that single financial statements also, there is no objection, everything is fine. What you can do on that single financial statements or specific element of financial statements also, you can happily give an unmodified opinion. You can happily give unmodified opinion. Second case, sir, on the complete financial statements, audit has happened, and in the audit report of the complete financial statements, that main auditor has given modified opinion. Basically, he has given either a qualified opinion, or in the main audit report of the complete financial statements, there is either an emphasis of matter paragraph, there is a other matter paragraph. Now, what should I do? Should I also give qualified opinion on that single financial statement? Should I also include emphasis of matter or other matter paragraph in my audit report on the single financial statements or specific element of the financial statements? Is it mandatory? Not required. It is not mandatory. The auditor has to decide. Auditor has to decide. Take, for example, I will give you one example to make you understand. See, complete financial statements happened. Audit happened. In the complete financial statements, in the balance sheet, there was a misstatement. In the balance sheet, there was a material misstatement. Since in the balance sheet, there was a material misstatement, the auditor of the complete financial statements gave a qualified opinion. But now you are appointed as auditor of a single financial statement and you are appointed to conduct audit of only P&L. You are appointed to conduct audit of only P&L. See, the main auditor, the auditor of the complete set of financial statements, gave a qualified opinion because there is a misstatement in the balance sheet. Now you are conducting audit of a single financial statement P&L. In the P&L, you did not find any material misstatement. In the P&L, there was no material misstatement. Sir, since I have been appointed only to conduct audit of P&L, can I give unmodified opinion? Yes, you can give unmodified opinion, no objection. So as an auditor, you have to decide whether in the complete set, in case if the complete set of financial statements contain either a qualified opinion or it contains an emphasis of matter paragraph or other matter paragraph, whether you should also include qualified opinion, emphasis of matter or other matter paragraph in the audit report on the single financial statements or not, that you yourself has to decide, keeping in mind the facts and circumstances. That means basically auditor is required to use his professional judgment. What auditor is required to do? He is required to use his professional judgment. Understood? But he can do one thing. Take, for example, the auditor of the standalone single financial statements, he gave an unmodified opinion. But what he can do is, in his audit report on that single financial statements, he can use an other matter paragraph. He can use an other matter paragraph, and there he will give a note in the main audit report on the complete set of financial statements that auditor has given a qualified opinion. That auditor has included a emphasis of matter paragraph. That auditor has included an other matter paragraph. That reference where you can give, that reference you can give in other matter paragraph. Clear? So there is no mandatory requirement to compulsorily give qualified opinion. You can give unmodified if you are satisfied, but what you can do is use another matter paragraph. There you highlight that the audit report of the complete financial statements contain either a qualified opinion or emphasis of matter paragraph or other matter paragraph. This man you have to do when the complete financial statements audit report contain either a qualified or emphasis of matter or other matter paragraph. Now, let us come to the next part. Third part is very critical. So Sir, I have been appointed to conduct audit of a single financial statements. Someone has conducted audit of the complete financial statements, but in the audit report of the complete financial statements, that main auditor has given either an adverse opinion or he has given a disclaimer of opinion. But whatever specific element have been appointed to conduct audit of only accounts receivable, sir. The main auditor, whoever has conducted the audit of entire financial statements, he gave adverse opinion. He gave adverse opinion. Sir, I have been appointed to only conduct audit of accounts receivable. In the accounts receivable, I did not find any material misstatement. Can I give unmodified opinion on that specific element of the financial statement or a single financial statement? The answer is no. Standard is telling you cannot do it. If the audit report on the consolidated financial statements, on the complete set of financial statements contain either an adverse opinion or disclaimer of opinion, you are not permitted to give unmodified opinion in your audit report on single financial statements or specific element of the financial statement. But sometimes auditor will have a gut feeling. No, sir, I have to give whatever area I have been appointed to conduct audit. There is no material misstatement. I want to give an unmodified opinion. Then the standard is telling you can do it only in certain circumstances. Only in certain circumstances you can give unmodified opinion on a single financial statements or specific element of financial statements where the main audit report of complete financial statements contain either adverse or disclaimer. Sir, what are that exceptional circumstances where I can give unmodified opinion? So those exceptional circumstances are this: in case the auditor is not prohibited by law or regulation. All the three conditions should be satisfied. If all the three conditions are satisfied, then the auditor can give unmodified opinion on single financial statement. What are the three conditions? Auditor is not prohibited by law or regulation, or that opinion is expressed in the audit report that is not published together with main audit report. So that means in some circumstances you can give unmodified opinion. Condition number 1, there should not be any restriction from law or regulation. Condition number 2, whatever report that you are giving on the single financial statement or the specific element of the financial statements, that report should not be published together with this main audit report, which contains an adverse or disclaimer. That means you have to give that in two separate documents, that both reports should not be published together. And one more condition, that specific element does not constitute a major portion of the entity's complete set of financial statements. And whatever specific element that you have audited that represents a smaller portion, that should not be a bigger portion. So if these three conditions are satisfied, what are the three conditions? There is no prohibition from law or regulation. Number 2, that report should not be published together. Number 3, it does not represent a major portion. If these three conditions are satisfied, then you can give a separate opinion on that specific element, that too unmodified. If any of this condition is violated, in those circumstances, even though that specific element, whatever you have conducted the audit, even though there is no material misstatement, still you aren't permitted to give unmodified opinion. You have to give either adverse or disclaimer only. Understood? So this is what the reporting requirements. These are the things which you need to keep in mind while conducting audit, while giving your opinion on a single financial statement or a specific element of financial statements. Able to understand, everybody? So this is what the summary of SA 805. So we are successfully done with 2 standards from SA 800 series. Now we are left with only one more standard, SA 810 we are left with. If we complete that, specialized areas revision will get over. So now we will take up the next standard in the SA 800 series for revision. So we will be discussing now SA 810, which is going to talk about engagements to report on summary financial statements. So this standard is going to talk about the engagements in which you are appointed to conduct audit of summary financial statements. See, as we all know, companies will have one complete set of financial statements, which contains a detailed balance sheet, which contains a detailed P&L, which contains a detailed cash flow statement, which contains a detailed statement of changes in equity, and a very in detail notes to accounts will be there. So generally, when you look at that consolidated financial statements, when you look at that complete financial statements of the companies, it will run for some 35 to 40 pages, 35 to 50 pages will be there. So complete set of financial statements are going to be around 35 to 50 pages. In some companies, it will go even bigger, even longer. So now these are complete financial statements. But in some circumstances, what managements will try to do is, from these complete financial statements, they will prepare one summary. They will prepare one summary financial statements where there will be summarized balance sheet, there will be summarized P&L, there will be summarized cash flow statement, there will be summarized statement of changes in equity. Very, very negligible notes to accounts will be there. Hardly some 2-3 pages of notes to accounts will be there. And they will try to complete that summary financial statements within a pages of some 8 to 10 pages. They will try to complete that entire summary of the financial statements. Sir, why the organizations will prepare summary financial statements? That is up to their choice. There might be various reasons because of which they might be required to prepare that summary financial statements. So complete financial statements will be there, which contain the in-depth, detailed, comprehensive information. From that complete financial statements, sometimes organizations might be preparing summary financial statements as well. And as an auditor, as a practicing chartered accountant, one client has approached you asking you to do the audit of that summary financial statements. So you are a practicing chartered accountant, one client company has approached you asking you to do audit of that summary financial statements. Now, SA 810 specifically says that you can accept conducting audit of summary financial statements only when you are also the person who has conducted the audit of the complete financial statements. This is a thumb rule. SA 810 has clearly told if some entity is asking you to conduct audit of the summary financial statements, you can accept that engagement only if you are the person who has conducted the audit of complete financial statements. Which means in case if the client is approaching you and asking you to do audit of only summary financial statements, and you are not the person who has conducted the audit of the complete financial statements, you should straight away reject that engagement. You should straight away reject that engagement. You aren't supposed to accept engagement in which you are conducting only audit of summary financial statements and you are not expected to do audit of complete financial statements. Straight away reject that engagement. This rule they did not say it in SA 800. This rule they did not say it in SA 805. In SA 800, you can accept the engagement of standalone you can accept the engagement of single financial statement. Sorry. SA 800 talks about special purpose financial statements. So SA 800 did not put any condition which says don't accept audit of special purpose financial statements if you are not the auditor of complete financial statements. They did not put that condition. SA 805 did not put a condition if you are not the person who has conducted the audit of complete financial statements, don't accept the audit of single financial statement or specific element of the financial statement. SA 805 also did not put such condition. But SA 810 has specifically put the condition if you aren't the auditor who has conducted the audit of complete set of financial statements, you are not supposed to conduct audit of summary financial statements also. If you are conducting both, then only accept. If you are not conducting complete set of financial statements audit, then you aren't permitted to do the audit of summarized financial statements. This is one important thing which you have to keep in mind when the client has approached you and asking you to do that engagement of summary financial statements. So this is one thumb rule which you have to remember. And before accepting the engagement to report on the summary financial statements, you should consider some factors. Whether I should accept that engagement or not. In addition to checking whether you are the auditor of the complete financial statements, in addition to that, there are some extra factors you have to consider. First thing, we need to check whatever criteria which the management has applied in summarizing that financial statements, is that criteria acceptable or not. So if the management has prepared summary financial statements from these complete financial statements, they will have some criteria on what basis you have to do the summary, which information you have to cut, which information you have to present. They will have some criteria, no? So that criteria, we call it as applied criteria. So first thing I need to consider before accepting such engagement is whether this applied criteria, whatever criteria management has applied in preparation of that summary financial statements, is it acceptable or not? That means, did they follow appropriate criteria for that summarization? If you came to know that that applied criteria is not acceptable, whatever basis management has followed for summarization, that is not acceptable, don't accept the engagement. If you find it acceptable, yes, the management has applied proper criteria on whatever basis they have did the summarization, yes, that is resulting in a proper presentation, then you can happily accept it. And sir, on what factors I will decide whether applied criteria is acceptable or not? Keeping what factors in mind I will decide? You will consider a few factors like nature of the entity. You will pay attention to nature of the entity. You will try to understand what is the purpose of that summary financial statements, and you will try to understand whoever are going to use the summary financial statements, what is their information requirements, and also whether that applied criteria is misleading or not misleading. So these are factors you are going to consider And after considering these factors, you will decide whatever criteria management has followed in the summarization, whether it is acceptable or not. If it is acceptable, accept the engagement of conducting summary financial statements. If the applied criteria is not acceptable, don't accept that audit engagement of summary financial statements. In addition to that, before accepting the engagement as an auditor, you need to obtain agreement of the management. You need to ask the management to give me a written agreement that they acknowledge their responsibilities. So you should ask the management, you should tell them, sir, these are the list of responsibilities for you. You give me a written agreement that you are accepting your responsibilities. What responsibilities, sir? First thing, the management is responsible for preparation of that summary financial statements. Auditor will not prepare, management has to prepare that summary financial statements, that too as per applied criteria. Ask the management to give a written agreement that they accept this responsibility. And one more important thing, you should ask the management to give me written confirmation that along with this summary financial statements, they will make available complete financial statements to the intended users without any undue difficulty. So whatever may be the reason the management is preparing summary financial statements, they will circulate the summary financial statements. In addition to that, if the user want access to the complete financial statements, it is the responsibility of the management to give access to that complete financial statements without any undue difficulty. This is also management responsibility. Ask the management to give a written commitment to me well in advance. Sir, you are circulating the summary financial statements. In case if the intended users wants access to the complete financial statements, you should provide to them that complete financial statements without any difficulty. So might be you might have how you can make it available without any undue difficulty. Might be you can say clearly from where and from whom you can get that complete financial statements. Describe it in the summary financial statements. Only describe that website if the complete financial statements are there in website, or if the complete financial statements are in or at some or in some link. So give that link, clearly explain where, clearly describe the process, clearly describe them from whom and where to get that complete financial statements. If possible, keep that on the public record, keep it available on for public record. And also if permits, you should set up a process. You should clearly explain the process, what process has to be followed by any user to get access to that complete financial statements. So that is your responsibility. That is the management responsibility. And as an auditor, you should ask the management to give me written confirmation. Yes, sir, we accept our responsibility to give access to the intended user to complete set of financial statements. We will not have any difficulty, will not create any difficulty. Freely, without any difficulty, we will give access to the user if he wants complete set of financial statements. And also, in case wherever management is circulating that summary financial statements, you should make sure that audit report is going along with that summary financial statements. You should take enough of care. You should ask the management to give a written agreement. Sir, wherever you are circulating summary financial statements, circulate that summary financial statements along with the auditor's report only. You are saying somewhere these summarized financial statements are audited, but if you are not adding audit report, that is mistake. So it is the responsibility of the management, wherever they are circulating that summarized financial statements, that must be attached with audit report. So regarding these four responsibilities, ask the management to give a written agreement. If the management gives written agreement, then only do that, then only accept the audit. If the management is not ready to agree to these responsibilities, don't accept such engagement. So first get the agreement, then only accept it. So three things I have told before accepting engagement. What you should do? Number one, you need to determine whether you are the person who has conducted the audit of complete financial statements. Number two, you have to determine whether applied criteria is acceptable or not. Number three, you have to obtain written agreement from the management regarding certain responsibilities. In addition to that, agree with the management on form of opinion to be expressed. What should be the format, how you have to give the opinion, agree with the management regarding that responsibilities also. Discuss with the management what form of opinion you are required to give. So fulfill these responsibilities before accepting the engagement. Okay, after considering all these factors, you have accepted the engagement. Now, what procedures generally you will perform? If you are appointed as auditor of summary financial statements, what general procedures you will perform? Number one, first we need to check whether in the summary financial statements, they have clearly disclosed the nature and identify the audited financial statements. That means in the summary financial statements, the management should clearly explain these are summary financial statements. These are not complete financial statements. This includes only summary information that they have to clearly explain. Who? Management. So whether management clearly explained in the summarized financial statements the nature of them or not, you need to check it. And in case, In case if the summary financial statements are not accompanied by the audited financial statements, that means if the management is circulating only summarized financial statements, they should clearly explain from whom or where these loss and from whom and where these complete financial statements will be available. Nothing but where to find the complete financial statements that they have to clearly explain. I will check whether they have clearly explained where to get that complete financial statements or not. In some cases, law or regulation may say that, sometimes law or regulation will say if you circulate complete financial statements alone, it will be enough. No need to circulate complete financial statements. Sometimes law or regulation may make it may say that, may give permission to the client, you circulate summary financial statements, that will be enough. You don't need to circulate complete financial statements. In that case, the management should have disclosed that fact. In that case, management should have disclosed the fact. Okay, because of so and so law and regulation, we are permitted to issue only summary financial statements. We need not issue consolidated. We need not issue complete financial statements. If there is no requirement of law or regulation, then compulsorily management has to say clearly where the user can go and get that complete financial statements. So first we will check whether in the summary financial statements the management has disclosed their nature and whether they have explained where to find the complete financial statements unless prohibited by law or regulation. And in that summary financial statements, they have to clearly explain the applied criteria. Nothing but according to which criteria they have summarized the financial statements, they have to disclose that criteria as well. And you have to compare that summary financial statements with complete financial statements and check whether both are matching or not. So whatever complete financial statements are there, from that only summary financial statements will be prepared. So I need to check whether both are matching or there is any mismatch, that I will check. And also I will evaluate whether summary financial statements are prepared as per applied criteria. And also I need to check that these summary financial statements are not misleading. They should not convey wrong information. They should be giving correct picture. I should also check whether they are misleading. And finally, I have to evaluate whether the complete financial statements are made available without any undue difficulty. So these are some common procedures which I have to perform. What are the common procedures, guys? Number one, I need to check whether proper disclosure regarding nature of summary financial statements is given or not. Number two, I need to check whether management has disclosed where to find that complete financial statements. Number three, I need to check whether management has disclosed the applied criteria. Number four, I have to compare the summary financial statements with complete financial statements. Number five, I need to check whether whether summary financial statements are prepared as per applied criteria. Number six, I need to check they are not misleading, and I also need to check whether really management has made available that complete financial statements without any undue difficulty. Basically, they have given a link here. You can find the complete financial statements. I should open that link and check whether really in that link whether in that link complete financial statements are there or not. Understood? Now the most important part of this standard is opinion. Opinion. So I will try to summarize here opinion part. It will be quite complicated if you read it from the material. I will try to summarize it. So how the opinion will be given on the summary financial statements? There could be two typical circumstances. Summary financial statements are, whatever summary financial statements are there, they are consistent. They are consistent with complete financial statements. Or summary financial statements are not consistent. Are not consistent with complete financial statements. Nothing but the main thing why we are conducting audit of summary financial statements, our objective is to check whether summary financial statements are reflecting whatever information which is there in the complete financial statements. So after you have performed audit procedures on the summary financial statements, there could be two options. There should be two outcomes. Number one, yes, whatever summary financial statements are there, they are matching with complete financial statements. No deviations are there. Or other scenario which could be possible is complete financial statements are showing certain information, but summary financial statements are conveying wrong information. That means summary financial statements are not matching with complete financial statements. That means management is trying to give wrong picture in the summary financial statements. If that is the case, if you come to this case, if you came to know that summary financial statements are not consistent with complete financial statements, they are not matching, management is trying to mislead the people by presenting wrong information in the summary financial statements, SA 810 says directly give adverse opinion. Directly give what? Adverse opinion. Clear? Next. Coming to the next case. Sir, summary financial statements are consistent with the complete financial statements only. So whatever information which is there in the complete financial statements, the same information is summarized in the summary financial statements. In those cases, I need to check then what is the opinion on complete financial statements. If the opinion on there could be a circumstance where on the complete financial statements unmodified opinion is given, or there could be a case where either a qualified opinion is given on complete financial statements, or on complete financial statements audit report there is either an emphasis of matter paragraph or other matter paragraph, where in audit report on complete financial statements. Last case, there might be adverse opinion or disclaimer of opinion on complete financial statements. So first you will check whether summary financial statements are consistent with complete financial statements. If that is the case, then you have to go and check on the complete financial statements there will be audit report. No, what is the opinion given on that complete financial statements? If the opinion given on the complete financial statements is unmodified opinion, and summary financial statements are also consistent with the consolidated, if the summary financial statements are also consistent with the complete financial statements, which opinion I will give? Happily you can give unmodified opinion. No need to have any second thought. No need to have any second thought. Coming to the next case, sir, summary financial statements are consistent with complete financial statements, no mismatch, but in the complete financial statements audit report, auditor has given a qualified opinion, or in the audit report of the complete financial statements, auditor has included either an emphasis of matter paragraph or other matter paragraph. Then what I should do? Since the summary financial statements are matching with complete financial statements, here also what you can do is, here you can give unmodified opinion. Here you can give unmodified opinion. Here also you can give unmodified opinion on the summary financial statements, because summary financial statements are matching with complete financial statements. You can give unmodified opinion, but in your audit report you have to state that the audit report on the complete financial statements contain either a qualified opinion, or it contains an emphasis of matter paragraph, or it contains another matter paragraph. You have to state that fact. Along with that, you should also explain what is the basis for giving that qualified opinion or including that emphasis of matter paragraph or other matter paragraph on the complete financial statements. And also you have to explain what is the effect of that on summary financial statements. That also you have to explain. So 3 things you can do, or 4 things you are supposed to do if the summary financial statements are consistent, are matching with the complete financial statements, but the opinion on the complete financial statements is either qualified opinion or it contains an emphasis of matter or other matter paragraph. Here also you can give unmodified opinion, no objection, but you have to state that the main report, the audit report of the complete financial statements contain a qualified opinion, or it contains an emphasis of matter paragraph, or it contains another matter paragraph. Also explain basis why there is a qualified opinion, or why there is an emphasis of matter, why there is other matter paragraph on the complete financial statements. Explain that reason. Along with that, explain what is the effect of that on the summary financial statements. Clear? In case summary financial statements are consistent with the complete financial statements, but the complete financial statements audit report contains an adverse opinion or disclaimer of opinion, then what you should do is, the standard says don't express opinion. Don't express opinion on summary financial statements. So you should say in the audit report of the summary financial statements, we will not express the opinion on the summary financial statements. You have to mention that fact. Along with that, you have to state the fact that the audit report of the complete financial statements contains either adverse opinion or disclaimer of opinion. Also explain basis for that adverse opinion or disclaimer of opinion, and also try to explain what is the effect of that reason on the summary financial statements. But here most important thing, you should not express opinion. Even though the summary financial statements are consistent with the complete financial statements, you should not express the opinion in case there is an adverse opinion or disclaimer of opinion on complete financial statements. Clear? So this chart is going to be very, very important. If you read the content theory directly from the material, it will be very confusing, but follow this chart. I am telling you, you can easily understand this. Clear? So this is what the major content from essay 810. Clear? So with this, I want to wind up this chapter. I don't want to spend even more amount of time on it. So we are done with the specialized areas, and in that specialized areas, we have covered 3 standards, essay 800, 805 and 810. Hope you guys have understood this. Take care everybody. See you in the next session.